Even playing, got a really bad habit. If it moves, gotta grab it. Fuse like a magnet. Lose, won't have it till I'm doomed in a casket. I ain't playing, got a weird mind. If you work 8 hours, I'ma work 9. If the shit tastes sour, you should taste mine. I'ma stay in power for a long time. Get up, nah, I ain't a quitter. Toss me the ball, I'm a really big hitter. Big picture, I'm a straight killer. Rising the song to the highest bidder. Got juice, got gas, I'ma move fast. New shoes, new tracks, like who's that? I'm new, come back, better than last. Yeah, it's a new me, never gonna look back. Never gonna look back. Cause damn, I was built to last. You move slow and I move fast, and that's facts. Only I can make a change. Slowly take a step today. I will never be the same. Cause that's what it takes.
All right, guys. Happy Tuesday. May, how are you doing?
I'm great. I'm so glad this worked out for collaboration.
Good to see you again.
See your work on the shares. I didn't feel like doing that, so it's always fun to have you do things really well. And so I'm happy to do the option side of it, if that helps the viewers. So to speak.
Yeah. So the main thing that I want to talk about, and more, I guess, your area of expertise than mine, is decoding Form 4s when it comes to the options. I mean, any of us can read the basics of what each field is and the codes, but talking about intent or any, like, where do they get these weird price options? Guys, if you don't know what we're talking about, there was a Form 4 filed yesterday by Antara showing a bunch of put options. Let me put it up on the screen here. Where'd it go? So we're going to talk about this, and then we're happy to talk about the settlement agreement that hasn't been approved by the judge yet. We can talk about that also, or whatever questions you guys have. So May, give a shout out to your channel real quick for folks that are joining on mine that haven't seen you before.
Yeah, definitely check out my channel. It's just youtube.com/markets with May. Down below, everything is about the same to make it easy. And I do some AMC and then a lot of other stuff as well, just in the way of various fundamental analysis, but it's mostly just my vlog on what I'm researching at a given time. So hopefully that is helpful. Okay, so how do you want to do it?
Let's jump in, and I think, as I'm watching the AMC community talk about this Form 4, the general consensus, I think, is just overwhelmingly people are saying, well, they're obviously shorting AMC. So let's talk about, because a lot of people in retail trading hear the word put option, and the first thing that drops in their head for whatever reason is you're shorting the company. So can you talk about that, and maybe what really is the intent of this Form 4?
Okay, so no matter what, if they even blink anything AMC, they've got to file. And I think that this Form 4 is filed after they took the position. I don't believe it's filed before they took the position, because I feel like I've been getting questions on my comments for a while on puts that have been bought by Antara. There's a couple of things that I will give you the extent of where it's ever so slightly confusing for me, but these look like bespoke options, meaning they went to the broker and just asked for who would take the other side of a given hedge. And so I did pull these into a spreadsheet. If I can kind of share them with you. And I also prepared some things for just talking about put options in general.
Yeah, pull up your screen share and I'll close this one.
Super cool. Okay, I'm going to start with just some slides that just talk about put options in general first, because I do think it's a little bit difficult if you don't have any background whatsoever. So the key thing, I'm going to go through put options in general, and then I'm going to go through why would you use AMC puts to hedge out your APE, okay?
And for anyone that needs, beyond what we talk about in here, I do have I have a options playlist on my channel with beginners options, like 7-minute intro to what options are for each type. So thank you for doing the longer breakdown here, May.
Yeah, no worries. I never know exactly where to start because it's always hard when you get to options. The word itself freaks people out. So I always just have this just in case questions come up. But this is the classic hockey stick chart. But what I want to do is usually people are presenting this, or a lot of times people are presenting this, and they're just talking about the use case where you're expressing a short position. But the OG use case for options, the original creation of options, really was for insurance. And then to the extent that you could create liquidity by allowing people to speculate, you would. And so a lot of times that's why when they talk about options, they'll call it options premium instead of just options price, because the premium is what you're paying for insurance. So first and foremost, when you pay for this insurance, you pay for it at a price, and then whatever you paid is the premium price that you're paying for a period of time, whatever the time of the strike. So it's always a strike at a price and then whatever you're paying on the premium. So as it's a little bit important to remember that whatever they paid for these puts is the cost of the option. So their break even is going to be the strike price minus the option premium. And then if it goes lower than that, everything is profitable. If it's going above that, they lose the premium outright, but they make money on the stock, so they're cool. So if the stock goes to $3 and also the ape transaction goes through, then they would make enough money on the stock where they wouldn't care that they lost the premium price. Okay. So now with that, I'm going to also show you the spreadsheet that I created to just kind of walk you through how I read the form and where I could potentially be a little bit off, because I do think these are what they call bespoke, meaning there may be elements to this that are a little different.
Okay.
And I'll tell you where it's a little different. I'm assuming that there's nothing crazy about these options in the sense that you just multiply them by 100. Technically, because of the way this thing reads, it's a little funky. So it's and it just has to do with the common share, and then the options is the same number for some reason. That can't possibly be the case, because that wouldn't be enough shares for it to even matter to someone to bother to do this brain damage of an exercise. So it really, yeah. So, but even then, so there's, and then the other thing that I'm assuming is that these are standard options. Even if they were some other type of option, it still would be the case that approximately this is correct. And why I'm saying that these might not be standard options is because of item 6. I'm just going to highlight it so you can see it. Item 6, date exercisable, and then date of expiration. So you really only have this tells me that there's probably something bespoke about it, because even though, like I said, I've been getting comments on my channel as well for a bit on these puts, it looks like date exercisable, the first time that they could even do this or do any kind of exercise on the options, is March 31st. And then the expiration date is a very short period thereafter, but this is fine. It's weekly, whatever. There's one that's gives you an extra week, whatever, as far as that goes. But clearly this particular option, given how it's showing in this document, and like I said, it may be something funky about the way this document is posted, but between column H and column I, it doesn't look like this is anything other than a hedge as we enter the final lap of this whole drama that we've all been enjoying between on the reverse split conversion, proxy vote, et cetera. Okay, so the way that this works is that with those assumptions, and if I'm wrong, you guys can then make the relative adjustments. But I just took the contracts, multiplied them by 100 to make them the shares, to translate that into shares, and then multiplied them by the conversion exercise price. And what I'm trying to do is figure out some concept of a weighted average price that they actually hedged it at. What strike was it, in other words? Okay.
Right.
And so after I do that math, I get basically this number here. Okay. $2.43 is approximately the middle point of all the weighted average of all of this. Okay. And then I wanted a weighted average price that they paid for it. So here's the entire, so all I did was I took, again, the contracts times 100 and then multiplied by number 8 in the document, which is my column L. here. And then this column M is the cost of that hedge, what they pay the broker. So I have them paying about $4.6 million for this insurance. And then the premium, therefore, if I take the 4.6 million and divide it by the total number of shares that these contracts represent, is, whatever, 4.6 million divided by 20. Sorry. And that gets you to 23 cents is what they're paying for this per contract. So $23 for every 100 shares or so, which is a pretty sizable hedge. But then there's a couple other things. First, the 20 million shares is only 8.67%. I'm using Feb 23 as the filing, but I know things are very shifty. So I'm using Feb 23. So I'm getting about just under 9% of their total shares are hedged. The rest is not hedged at all. So given that that's almost a $500 million position, I'm not thinking that they're doing something too aggressive here. Okay. Then the second thing that I'm looking at, unless these are really truly bespoke and something else really crazy is going on that's not showing in this document, then the second thing that I'm looking at is their average price, which I just Google searched, but this could be wrong because I know you've done more work on this, Tony, so I can plop that in there and everything will change. But I'm seeing their average price 53 cents. Is that wrong? I feel like
it was like the average for the price that Antara paid from everything they bought from AMC was about 82 cents.
See, that's what I thought. So when I saw the article, I had a feeling that was wrong. That's why I just did it. So let me just plop that in. Okay, so 82 cents. Then you have to take the average strike and subtract the cost. So they're paying. So their actual strike price or the actual implied price is $2.20. That's where these things become profitable. Or sorry, that's where if AMC drops below 220, that's where they're hedging. So it's just a classic put. So going back to the other chart, let me stop sharing. And I know I'm probably going to have to come at this a couple times because I know options, if you're seeing it the first time, are
while you're pulling that up, there was a question which I think is a legitimate one because I didn't even really think about the fact that this existed, but of course everything exists if you're willing to pay for it. Can you explain to the folks what a bespoke contract is, or a bespoke trade?
Oh yeah, sure.
I know of the word bespoke from travel, like luxury travel or fashion, but tell us about how bespoke is used in finance.
There's these. Okay, so the options trading desk, especially if they're rather clever, and there's a few brokers that would absolutely do it, will have a desk on the options desk, and some of them are just there to facilitate institutional trading in large volume of options if that's something that's actually wanted. But then there's a set of people that have very specific risks, such as $500 million worth of stock in AMC. And it's a big position. Even like Antara's total assets under management, that's actually a number that matters, right? like if we really look at the percent of total investments. So they would potentially be concerned because this is also something that swings around like crazy.
Yep.
And someone with a brain is going to be like, hey guys, I trust you on this. I think you're doing the right thing. But is there a way that we could kind of like lock in some portion of the gain that we have thus far, or just lock in something so that at least I feel like we're not, that at some portion of our position will move in a way that protects us. The same way that you would be like, if you had a house next to the ocean and you knew that a hurricane might come, even if you built it like amazing, you might still be like, you know what? Hurricane insurance. They're really at this, given the size of what it looks like it is, unless somebody else just knows that they structure this differently, this looks like insurance to me. So then what you...
Go ahead. Sorry.
Oh, so then what you would do is you would call brokers that have desks that could do this, and you would ask them, hey, what would you guys be willing to give me in the way of insurance? I'm willing to pay. What probabilities are you okay with and at what size? And sometimes the desk will be like, yeah, that's fine, we'll do it. And sometimes they'll actually find the other side of the trade. So if they're short, then somebody else wants to be long in a particular way. And so so that's really very unique portions of the options trading outfit that would have this expertise. And it's not a big portion at all of anyone's business, but does exist.
It's basically like a private banker for people that need creative solutions and don't want to go buy options on the regular options market.
Yeah. So like things that it might be they're like the fancy jargon words. There is this thing called a digital option that would not trade on exchange. And so what that is that you don't take any of the upside at all. It only pays out when you actually hit that lower bound, you know. So then there's a different pricing strategy associated with that. And that desk that does that is full of really great math geeks. Yeah, it's custom options. That's exactly right, Kevin, right? That irony, because your name is right and you are right. So that is exactly correct. Yeah. So that's what this kind of looks like. That's what this is. But then again, as a result of that, I can't take anything for granted that I normally would, which is that you can multiply this by 100 and just get the number. So if someone just knows better than me and is 100% certain, then yeah, they should show you proof though, because I'm not just because we got so many FUDs out there that I'm sure somebody's going to write something tomorrow that is completely fictitious. But essentially, this would be the way that I would read it. Okay. So
did you want to bring your spread? Oh, you got your spreadsheet.
Yeah. So essentially, this would be the cost that they paid it. You subtract it, and if it goes below that, okay. So then, the reasons that you would. Oh, actually, let's go back to the spreadsheet first just to make sure I didn't miss anything that I also wanted to show there. And then I'll go back to a couple of like reasons and comments, and then we can take outright questions. Okay. So then realizing that at whatever, because it's C19. Yeah. So realizing that at $2.20, it does look a little bit like a pre-sale of $2.20. Because of the dates that they chose, it looks like the way they're thinking about it is that the situation would resolve itself by whatever is the expiry date. And the expiry date is here, right? So mostly the third week of April, but also potentially the end of April on this one, on the bulk of the options, the 32% of the options that were written were done on the 28th. And so if you just take 220 and subtract it from the 82 cents, because it's 1-for-1, then you would be locking in 168% upside on just that 8% of shares or 9% of shares. That's why to me it looks like insurance. Okay. Now then the question that a lot of people have as relates to why are you doing this if you own APE shares? And that one is a little bit of a funkier answer. And this one, if given the size of it, everybody, if your home is your biggest asset, you also buy insurance on some portion of what's going to happen. So if this is a gigantic position for Antara, there is someone, either the chief investment officer or the chief head of risk, especially in this kind of crazy market volatility we have with the banks doing what they're doing, is going to say, hey, can you hedge any portion of this for goodness sakes, just so that we're not like totally effed if all this other crazy stuff happens? And then they'll go to the broker dealer and try to do that. But realize here's a couple of things, and I just wrote them out in case somebody is trying to follow along and is better visually. First, there's no puts on APE. So because there's no puts on APE, you can't do it the classic way, which is to sell calls or buy puts to try to hedge yourself out and be much more direct. So then what will happen is the person that's responsible for like front office risk, which is how do I hedge this book, is going to think about literally anything that is related to APE. So they'll look at the S&P, and when they go to do that correlation, they'll see that the S&P, just as an index hedge, has nothing to do with the way APE moves. Then they'll go to the Russell, which is very liquid, and they'll see that it has nothing to do with the way it moves. They'll use that meme stock ETF. It also will be doing its own thing. And the poor guy that's responsible for hedging this will be like, this sucks. My life sucks. Why don't we try AMC and then try to do it in this digital way? Because all you're really trying to say is if AMC itself falls through, because probably as Antara, you feel comfortable given how tight you wrote those options right on top of the end of this lawsuit. Probably you think this lawsuit is going to be done by then. So what would it cost? And what are people willing to do? They probably called up their broker dealer and said, hey, maybe I know you're not going to do them on APE because there's nothing for you to use to even try to offset that risk. What about AMC? What can you do for me on AMC? And then the broker, given that there's a number of different ways they might be able to do some funky calculation to make money one way or the other, would then probably come back with something that they can do on their side to protect themselves if they take on this risk, and then be like, all right, this is what we can do for you in the way of insurance. And so that's going to usually end up being on the more liquid instrument, which is AMC by a lot. And the liquidity isn't just the liquidity of AMC, but it's also the liquidity of all the derivative instruments that exist on AMC as well. And so that's why you would go to AMC. However, the underlying assumption in even doing it is that you believe your APE shares will transfer over to AMC. Now, all of the math that I did does presume that it doesn't take into account yesterday's news. Okay. So because of yesterday's news, the hedge ratio that I gave you of 9% needs to be recalculated, which is why I think you guys should check out Tony's earlier video from yesterday. I think his share count is right, but honestly, it's sometimes you stare at this thing until you're crazy. So yeah, so basically, hopefully that clarifies it. And then again, I know because everybody always gets really mad at anyone owning APE. You really need to redirect that. I put together a little naughty list for you. These are the people you really should be mad at.
Oh yeah, we got legions of people that are like, oh, you just want X, Y, Z to happen because you bought APE. I'm like, buying APE as it got cheaper and cheaper was like literally the most no-brainer thing out there. So if you didn't do it, don't be mad at us that did.
Yeah, this is
what's your naughty list?
Yeah, this is my naughty list right here. If you were a short seller that created this spread to begin with, you're kind of a jerk, because the AMC in general, people that actually care about AMC surviving, now have to raise capital at a stupid price. If you are a FUD in general, or if you're just a day trader that wanted this volatility to continue because you're having fun trading it up and down, that's not fun for investors. And that's also not fun if anyone's trying to raise capital. So you go on the naughty list, in my opinion. And then if you're just a short seller who's spreading FUD because you just love to do that, you definitely are a jerk and you go on the naughty list, because you make raising capital, which is what this company needs to do, really painful and difficult. So if you want to add some people to the naughty list, that's all I've got for now on that.
I would add to the list any social media influencer who just told you APE is awful, so therefore don't support it.
Yeah.
Like I think they listened to unwittingly or maybe you had it as number 2, FUD, on your list, but
yeah, there's a couple of different weird folks out there. It's annoying. Look, if somebody wants to say they don't like the financials and as a result they don't feel X, Y, and Z is going to happen, that at least is fair. If you just fundamentally think that theaters are going out of business, that is your right. We would love to see your research. That at least is like a legit reason. I personally don't think theaters are going out of business, and I personally think that there's a number of things he's going to do to try to allow the business to right size itself. In some cases, it will involve closing down certain theaters. In other cases, it will involve doing unique things with the licensing. But, those are fair arguments. All the other nonsense to me is unfair you got me.
Hey, May, let's talk about a couple of the big elephants in the room and see if you've thought about these or if you have any thoughts. Like, I know for myself, and I'm sure I'm not the only one, when the settlement proposal dropped yesterday, surprise, the Antara Form 4 dropped on the same day. So people's mind automatically go to Antara knows what's going on. This was all planned. What are your general thoughts on that?
I mean, I think that the company needs this thing to close because and you've said it in many of your posts as well as your videos, this company has a it has a funding shortfall for sure. And it actually for sure is kind of the wrong words, because they're right on the precipice of being able to be cash flow positive again. Like it's
Right.
so close. So, but like there's no way to run a business, right? You want to run a business by having plenty of capital to be able to navigate the environment. And in fact, we are in such a weird environment. The smartest thing to do is to try to shore up capital if you can. Right? Some of the stuff that they're already doing is so cool. So the idea that they're doing anything other than trying to just get rid of this so they can move forward as a business, to me is, I don't understand why you'd feel that way. It's not in anyone's best interest. Like it wouldn't make sense to me. I don't know. Does that answer it? Like,
Well, the actual question I have is, did AMC talk with Antara about, hey, we got a settlement agreement coming out, and Antara on Friday, Antara was like, oh shit, let's go get these puts and get this stuff taken care of. Or
it's 9%. People have to find the other side of the trade. So that, like, there's, first of all, who's going to cough up? Like, that's still, I mean, it's 20 million contracts, right? Like, who wants the other side? You have any idea how long it takes to get the other side of that contract? Do you know what I'm saying?
No.
Like, that is like not easy. That's a worked, I mean, unless you're on the options desk and you're like, no, man, you don't realize how many people want the other side. Like, then come post, please, by all means. But that's a lot of options contracts. Do you know what I mean? That was not done yesterday. If you want to pretend like it was done long ago, then I think maybe you're spending a little bit too much time in conspiracy theory. I think the crazier thing is that, I mean, you got to think about it. It's $500 million unhedged, volatile as heck on their balance sheet. There is no person on this earth that isn't trying to buy insurance on that.
And for those who aren't quite sure what we're talking about when we're talking about using, let's just say someone who has no idea about options, give them an explain like I'm five version of how we would use a put option to hedge a position. And you guys, I want you to hear this. Like if you own 1,000 shares of AMC or 10,000, right now you are literally hanging out to dry if the stock goes down, but you can buy insurance for your position if something bad were to happen. If you want to hold that position, but you're fearful that something bad could happen, this is what hedging with put options is. So May, you want to give them your explanation?
The original use case of options, I'll say it, some people will fight me on it, but the original use case was always as insurance against a long position. That's like way back in the day. And then because of how you actually get a market started, it was used for other things almost immediately. But like it's literally identical to buying car insurance. Most of the time you shouldn't have any problem. And then on the off chance you do, you have this premium that kind of caps what your loss is. You're still paying, by the way, your entire premium up until that point. And because these were done at $2 versus being much higher or something else, and because of where Antara did their purchase price at, it looks more like insurance to me. And probably they started having the conversation when their 80-cent or whatever purchase price already was way over $2. They don't have the right to sell it according to the original documentation. Was it like 90 days, right? According to where the deal was struck. So 90 days from the time they struck it. So they essentially are just pre-selling it. I mean, there's not a lot of extra going on. If it was the whole 250 and someone actually gave them the other side of that, then I'd feel differently. But but it's a small portion.
I like that example of a car insurance. Like, guys, if you have your car and you buy insurance and you don't have a wreck for a year, you essentially wasted that money. But if you totaled your car, then that insurance was a good investment. And that's how hedging with options works also. You're worried about something happening, so you buy the insurance or the hedge, the put options, and if the worst doesn't happen, well, you spent that money just like you did with your car insurance, and no accidents happened. But if the stock market gets totaled or your position gets totaled, you're not left with zero and just wiped out.
Yeah, and it's still the case that on when the deal closes, let's say the deal was to close today, Ape would trade up to AMC's price, not the other way around. That's why right now you're getting this oddity that's going on because the deal is settled, and so the market is trying to find whatever is the actual finalized price between Ape and AMC. And I think I've been. It's really going to be driven by AMC as much as it's going to be driven by. Well, no, it's really driven by AMC. There's no other discussion about it. So Ape will either trade up or AMC will trade down for the next little bit. And then it has to do with the fundamentals of AMC. But regardless, if you think about it, AMC still closed like way over 350. What did it close at today? Like 373?
I've got it here. It closed at 391.
Yeah, 391. So those options are more or less worthless right now.
All right. So let's talk about the second big elephant in the room. When people see this Form 4A, they're going to be thinking, oh, well, they know that the judge is going to approve the settlement, which I don't know how you could know that because no one knows how Chancellor Zern is going to rule. But they know that the judge is going to approve the settlement this week, and therefore they know the reverse split is going to happen and dilution is going to immediately follow, and AMC is going to tank by 421. I guarantee you, May, there's people out there tweeting that and making videos about it. Like this is all planned. They want to capitalize.
It's much better marketing if they just keep it up. I think they're bad for adding the one. What's wrong with them? Sorry, I'm just saying.
I mean, I don't know how that thought, that people are saying that strikes you, but that's making an awful lot of assumptions, right? You've got to assume you know what the judge is going to do and when, which none of us know. Even the guy that I follow that follows the Delaware Chancery Court said that it's not a slam dunk that Chancellor Zern is going to accept this settlement agreement. I was reading his blog last night. I was thinking, well, if the parties agreed, it should be pretty much a slam dunk. But he said of all of the chancellors on the Delaware court, like Chancellor Zern is the most likely to say, hold up, you guys made all this big deal about this thing, and now you just want me to say, okay, she might not approve the settlement right out of the gate. So, maybe it is a slam dunk, maybe it's not. But to make a $4 million bet, not knowing what the judge is going to do.
Okay, I don't have strong feelings about that. Regardless, your risk manager is going to ask you to hedge that. Like I'm just telling you now.
That's what it all really comes back to, right, guys? Institutions are not going to leave hundreds of millions of dollars out there unhedged.
Yeah,
if they're smart.
My suspicion is they probably wanted to do a lot of it as much as they could, and that this was just the cap. Like no one wanted to take more than the other side at this size. Is my guess. I mean, like if somebody knows better, you can't know everything in this marketplace, but that would be my gut reaction to the fact that they hedged this small little baby amount. I'm like you. I can't tell what legal is going to do. I have no idea. Do I think they further dilute afterwards? I don't think people were confused that they still needed to come to market one more round. But some of these numbers, 15 billion, like you guys need to lay off. You need to lay off I know we legalized it in a lot of states, but maybe you need to take a half a step back.
I think that was all 400 million shares sold at what would that price be? May $40 a share.
Yeah, I don't know what they were thinking. Like that, there's amount of debt that they have. If they pay off the debt, I think their debt, how much, like on the balance sheet, I think their debt expense or their interest expense is something like 300. It's like 100 million, something like that. It's the debt expense that they have. Hold on, let me just look.
The debt expense per quarter.
Per quarter, yeah.
80 million roughly.
Yeah, so about 4 times 4. Yeah, so like 300 over 300 million a year, right? Is what they pay. So that goes away if they pay off all their debt, guys.
Right.
Like I don't understand. So they become cash flow positive at that point. In
other words, there'd be no need to cash raise 16 billion. That would be a ridiculous amount of dilution.
Yeah, it's 5 billion in long-term debt, just under 5 billion in operating leases. I mean, like What are you talking about? And their debt currently is about 12%. So the minute they paid off like all of their long-term debt, which would be not necessarily the right thing to do, you could just refinance it because you're still at 12%. Like, what
Blazin
are you
had a
smoking
question.
when you guys say 15 billion?
Blazin has a question for you. I put it up on the screen there.
Okay, and what, if any, are these? Okay, the major ways, the major, okay, digital options are not usually something that retail folks can have, and you would just call up the desk. So digital options are very binary in the way they pay out. Otherwise, I mean, it really can be anything that you need to insure, and then it's just finding someone else that's cool with having the other side of that insurance. So they can be as bespoke. So if you think about it, like car insurance, okay, that's just like probably there's some guy on the other side that takes in your data and gives you more or less this like package of insurance. And then there's really specialized insurance for like really special business needs or something like that. This falls under specialty insurance, but is still trades on the options market. The real thing that you may be asking is why then is it not just handled by the insurance market? You handle it this way because then you don't have to go to court when you don't want to pay. Like the thing that you really want to understand about the options market is what makes it awesome and as a major innovation is before that, if you wanted to insure your equities, right? Literally, that's what this is. You would go to an insurance company, a specialty insurance company, and they would insure it. You know, the way that art is insured, the way other assets are insured. But if you had a dispute on your insurance, like, you know, technically a lot of you guys have probably had this experience with your homeowner's insurance. Your insurance company comes in there and is like, yeah, I know we said that was insured, but now like we have a different, that's not actually part of the roof. I mean, like, what are you talking about? See, do you know what I mean? Like all of these discussions.
You didn't read that one line.
That one line, yeah, that nonsense. So to get rid of all that nonsense, that's what the markets actually are, is this beautiful thing where things clear and we don't go to court to talk about it. So specialty options or specialized custom options have that attribute to them where the contract is still within a very particular format. You sign it and that's it. Like, you know, when it pays or it doesn't pay. Yeah. You would not use Black-Scholes. You would basically, yeah, let me just say it that way. You would not use Black-Scholes because that's probably the right answer.
Don't want to misspeak.
Because technically Black-Scholes is a very particular equation to describe a very particular thing. However, you essentially would just, you would need to understand that equation and then you would modify it for just one payout. It's particular. It depends on exactly how that contract was written. Let me say it that way. Let's not try to get too complex because we do get beyond. At some point, this math does get harder than I can answer it.
But May, we're going to need to know this when we go to our broker and ask for the bespoke options desk. We're going to need to know these things.
They're not going to do it, but you know what? Honestly, the math does get more complicated when you're not using the standards stuff. There are definitely people that are way smarter than me on that. I'll just give it to them. At that point, I'm a dumb trader. I'm good. Like, so.
What other thoughts, May? I talked about this on my live stream last night, but I'm sure there's a lot of people that don't want to go back and watch a 3-hour live stream to get this little tidbit. There were a lot of questions yesterday, and so I'd like to hear from you. I already gave my answer last night. Why? People are wondering, why did AMC drop after hours yesterday when the news came out about the settlement? Why did APE go up? And was this people shorting? Was this manipulation? What are your thoughts? 20% down on
spread.
AMC, 20 up on APE.
Yeah, I mean, there are going to be people that are going to play this because basically if it goes through, the price of APE and AMC have to merge. And that goes back to all the other stuff that both of us have done on implied price. So, you know, the two have to become one. Ultimately, when we say the two becomes one, it's really APE becoming AMC. So right. Either APE is undervalued at that point or AMC is overvalued or anything in between. But ultimately, if it goes through, I think it's probably, and I think I don't remember from the document because that was the document that was filed last night. I think the timing is as soon as this court case is done, it would be that the close of that day. Is that what it said in the doc, or I can't remember. We might need to double check that. I don't want to put you on the spot.
What was the question? Did it say what?
So like between now and whenever the judge rules
Mhm.
is it, and then as soon as the judge rules, I think it's close of business day.
Well, AMC had been telling us before the vote that if the vote passed, that the to expect the reverse split and the conversion the next day.
Yeah.
So that was my presumption, that if the judge ruled accepted the agreement, the settlement agreement, that they would try that same thing. But then someone else wrote an article, surprise, that someone has already wrote an article by this morning or last night that the judge already accepted the agreement and it'll all be clocked in 10 days. I haven't seen that. I've just seen an article. So I need to see official communication from the Delaware court or from AMC or an 8K or something. I don't go by what Marketplace wrote.
Yeah, that's smart. Okay. Yeah. So we don't know the answer yet at this point, but it's imminent because I mean, it's somewhat imminent. So here's the thing.
Somewhat imminent.
Somewhat imminent with all of the other caveats that we put on it. Your issue is really this. Let me simplify it a little bit then. Your issue is this. The spread between APE and AMC is still crazy wide. Crazy wide. I want you to just, for context, look at the spread between Activision and Microsoft, something else that I'm cooking up, right? The spread between Activision and Microsoft, that deal has been pending since last year. And the spread between them is like not that between the closing price, which is $95, and the price it's currently trading at is $85. And that's like the lowest it's gotten is 76. Okay. It's not like 300 times, you know, like it's like crazy. Like this spread, again, there's a reason those three people are on my naughty list. It should never have been this wide. Okay,
the spread at $5.10 and $1.40 to me was out of whack. Right now, I think we're very close to the arbitrage formula.
Yeah.
I'm saying APE at 50% of AMC, it's baked in because of the difference in the floats.
Oh yeah, like as of today, right?
Yeah.
Yeah, that makes
right
sense.
now we're close to baked in.
Yeah.
There's
with
not
a
a whole
little
lot of
bit
arbitrage
left just in case this thing does
There's a
something
little
crazy.
bit left as I'm looking at 390 and 169. I mean, there's a dime there on APE, or
Yeah.
a dime that for them to move, but they're
Yeah, so
pretty close to where they need to be.
Yeah. So the market is telling you that the judge is not gonna, it has no incentive to stop it. That's what the market's telling you.
The vast majority of my experience with the courts is if the parties have agreed, the judge is going to sign off on it because they don't want to tie up the system.
Too.
They don't want to tie up the system hearing a case when you've already agreed.
Yeah.
You know, sidebar, you've already agreed. Why do we need to have hearings and a trial and yada, yada, yada? So unless she has a point to prove,
really strong point. Yeah. To prove.
then I think it's done deal. May, a lot of people are saying Adam Aaron is settling because he doesn't want to be deposed.
You know that's dumb, right? I love you guys. Please don't think I'm calling you specifically that way, but that particular argument has a lot of holes in it. There's a lot of holes in it.
Number one hole being that the plaintiffs agreed to settle too, right? Like everyone blaming Adam Aaron just conveniently sidesteps that the plaintiffs agreed to the settlement also.
And the plaintiffs were originally the ones that were dragging this out.
They didn't. They were the ones that didn't want to be deposed. They were the ones AMC had to file a motion to compel deposition, like the tap dance that these Aaron haters use is really, really funny.
Yeah.
And plus, I think I read that AMC's already provided 30 to 60,000 pages of discovery. It's like they're not hiding anything, guys. A deposition is mostly just getting on the record verbally what was provided in the discovery process.
It's really weird to me because like there couldn't possibly be more documentation on Abe, like all the legal stuff, everything that's been said, like
all board hearings and board hearings those are all recorded, right? I'm sure they have all that. All the emails were asked for. There's really no extra value that they could have got out of deposition from AMC other than maybe a trip you up gotcha moment if they found something spicy in the all the documents that were provided.
And this company is like under a microscope at all times. What exactly is it that you guys think is going to come out? I don't know. It's exciting to see.
What else? What else has been going on? What other questions you guys have?
See. Oh, you know what? This is a good one just to remind people of, right?
What's that?
On the 10-for-1 reverse split, what happens
Okay,
to the
let me
options?
put it up on the screen here.
Yeah. Yeah. What happens is you need to be out of options unless they divide by 10 evenly. That's what happens. Because here's the thing, it's very clear what happens to fractional shares in this situation, but options aren't like they are technically a synthetic. So it's whatever the broker wants to do. You do not want fractional options, guys. It is such a pain to get rid of fractional options. First of all, you have to call the options desk 90% of the time unless you've somehow got some really clever relationships with the options desk. And then it's voice broker to get rid of these fractional option positions. So if your options don't divide by whatever the reverse split, you need to get out of them. If you got 7 contracts, no. Okay.
That's a excellent point. I didn't even think of. And the other thing that we're trying to figure out that I just have been telling folks I'm going to wait for the OCC. How is the market cap of APE moving back into AMC going to affect all of these options?
It shouldn't. I mean, it's just the price. So all the prices will be reverted up. Market cap shouldn't do anything as relates to it. It's whatever the final price of the close is, then they'll multiply it by the shares outstanding. And that'll be the price of AMC.
I hope it's that simple.
It is. It is. That's how all the mergers. I've unfortunately I've screwed this up enough times where I'm very clear on what happens on a reverse split and a merger. I've done both. I've messed both up. So post merger, these things like the new CUSIP will be like whatever the market cap is. The only thing that has bothered me, and that's why I really liked yours because I feel like you've done a good job keeping track of the shares, is even on like because of when some of this stuff is happening and also how the filings are happening and he's still trying to raise assets with it, it's all over the map trying to figure out what the final share count is. Do you know what I mean? But ultimately, because most of the reasons the share counts are reading, number one, incorrectly in every single data feed. But even if you look at the 10K, they're showing 1 billion shares outstanding. So it is really so trying to figure out what the final price is once they merge the two together. That one is a work of art. I'm not going to lie. And then with the settlement that was came, it's like a work of art. Is really what it is. So you're showing 156.
This is my spreadsheet. Yeah. This is the column right here. I've got a couple comments that I was off by 1 share or by 10 shares. I'm not. Maybe I am. Maybe I am.
Rough community.
And I appreciate the attention to detail. I will go in and double check that and fix it. But we know from the 8K that the AMC said they had 519 million AMC shares. And we know that after the split, that'll be divided by 10. So in the 8K, it said that it'll be 51.9 million, not 519. And that the settlement will be 6.9 million shares.
Yeah.
So you divide 51.9 million by 7.5, you get this exact number right here. That tells me, for anyone who's still questioning it, this settlement is exactly like it is described in the 8K for AMC shareholders only. Anyone holding a single one of the 519 million shares, you're in the settlement award class.
Yeah, that's what it looked like to me too.
It does not pertain to APE holders because they use these exact numbers highlighted in green, 51.9 and 6.9 million. And then they also told us after the conversion, the reverse split, and the settlement, the new estimated share count will be 156 million. So I just created my formula and I had to go in and tweak this number till I got the exact number of APE shares to make that work.
Yeah, and in case you were like me, you can see at the very top which numbers come from which documents, which I couldn't see this morning. I was like, Tony, where'd you get all this stuff? Then I was like, oh, you know what? This is way too small watching on a cell phone.
Yeah, it's tough on a cell phone.
So row 3, guys, is where you can find those documents.
Yeah, this column came from the 10K. This column was from the prospectus filed on March 8th, and then this was the most up to date. So
Where are the shares for these options coming from? Remember, options are synthetic. They don't involve the shares at all. So there wouldn't be any concern. This is Steve Hoping's question. So this gets very confused. You know, everything that's built off of the everything that's built off of the shares is synthetic, technically. And I know that with AMC, there's like I got this weird light at this time of day. I look really strange. I have like halo behind me. Sorry, guys. But like, so everything that's synthetic, it's always based off the share price. There's no shares that are pre-accounted for on the options, because essentially you can settle options in cash. So you can also just owe a ton of money one way or the other. Or alternatively, you could show up short, which your broker will sometimes do. So if you're long the puts and it's close, I had a broker do this to me. I lost my S on them. I will not lie, because I was like, listen, this thing closed here. I had the option to exercise or to just let it go, whatever. You went ahead and exercised me without even calling me. That's messed up. So just realize that if you have a put and you think it's expiring worthless, but it's right on top of that thing, because of the way options settle at end of day, it can shift to be under. And there are some brokers that will go ahead and exercise you if they actually have whatever. And I think it's really messed up. This is something the SEC probably should look into, because if that thing is hard to borrow, they are now charging you an interest rate and they exercised you without your permission. But hopefully that made sense. But there are no shares that are attached to any options.
Mace, I saw some people sent me comments. I don't know where it came from, but someone was saying, oh, this 6.9 million share settlement is great because the shorts will have to pay the shares to the AMC shareholders, the 6.9 million.
Gosh, I have to think about that. I don't,
because should be coming from shareholders' equity, right? Not coming from shorts.
Yeah, it's not going to come from shorts. And if anything, it's a little bit awkward because I think it actually ends up looking like a type of dilution.
Well, absolutely, it's a type of dilution.
Yeah. So
I don't know is it fair to call it a type of dividend, or is that too nice?
It looks like I think that's probably right. With the accounting, man, I'll tell you, like, AMC is probably some of the most fun and advanced accounting, fun in air quotes for anyone that's an accountant, because I don't know how that's gonna like, I don't know. I think like, not being an accountant, my guess is that you're going to either have to put it in as a settlement award, if that's actually a class of something that you can put in, maybe if someone's an accountant, or as a dividend.
I have a message into my my accountant, but he's not a Wall Street accountant. So if I get an answer, I have my guess of what it is.
I don't know is the answer for me.
I'm going to go with, I don't know for sure. I'm sure it will be reported in the next 10Q. They'll have to talk about how that was handled, but
yeah, maybe Mr. Aaron, if you happen to be watching, if you could share your lawyer's knowledge or your accountant's knowledge with everybody trying to file taxes in the last 24 months.
Safe to say that the shorts are not going to come up with these 6.9 million shares, though. It's coming out of AMC's treasury.
Yeah. But also, if you could just help everybody's accountant out and let us know how we should tell our accountant to treat this, that would be really cool as well. I'm just saying, very quick thing for his accountant to let us know, maybe.
Let's see. Someone said Carlisle has a question. Let me see if I can find it. William, I see something. Here it is. Something about AMC versus AM.
Justice lighting.
I'm not reading all the questions, William. So hang on one second.
Do that. It's a little better.
AMC 1 contracts versus AMC contracts. Are AMC contracts worth half after the conversion? When there is a reverse split or a split, your strike price is going to do the exact same thing. So in a 1-for-10 reverse split, the strike price will go up. If you have a $5 strike, it's going to go to 50. And the price of the value of that option will change in the opposite direction also.
And if you have 10 calls, you now have 1.
Yeah, that's what I meant. The quantity will change. The quantity of your options. What happens if you have 1 call option, May?
You have a fractional option. Is what you have. You want to not have that. That sucks. Man, I've been on the broke and they literally realizing how many people are playing this in the marketplace via options, then you will literally be on the phone with your broker. Hopefully you get someone who actually knows what you're talking about. And then they will, and so if you're a broker watching this, please let your entire desk know in advance that there may be some people that don't watch us because they're FUD people. And then and you have to wait for them to find the other side of the trade, which quite frankly, right at the open, there will be people, but as the day lingers through, you're not going to be able to find the other side of the trade. It's really obnoxious.
Yeah. I
So
need to go
hour,
find some OCC memos of other stocks that have done a recent reverse split and just validate and publish exactly what you're saying.
Yeah, I had one. I'm trying to think of what stock it happened to me on. I have to think about which stock it happened to me on. But it happens both ways, whether they split the stock or whether both of them are obnoxious when they happen.
Here,
I know GE had a reverse split. I'm sure people had like something on GE because definitely people play the options market on GE.
Do you want to address Wired Apes question? I'll put it up on the screen here.
We got the amount of puts they got most certainly comes from market makers. So the hedge the risk buying. Do market makers hedge their risk by buying shares? Yes, they do. So if they're, I don't totally understand where you're going with it though. The amount of puts they got. So you're long the puts, which means you sold. So you would own shares typically. I think. So you have to have the other side.
I guess I would ask Wired Ape, like, what is your thesis there? If you're the start out of your thesis is they created a put wall. Where are you coming from with that? Like, what's their strategy? May laid out in this video, the most obvious strategy is hedging your position.
Yeah. So if you have Ape shares, if you're long Ape shares, you might buy puts just because you plan on selling them at some later date at a particular price. You are only looking for so much upside, and then you're like, cool. And in the case of Antara, because they own the Ape shares at like 80 something cents, that's a lot of upside for them. So they're happy to sell whatever portion they can, just to start to kind of pare down this gigantic position. And quite frankly, I wouldn't have been upset if it was even a little bit bigger, because that's a wall of Ape shares and AMC shares that ultimately, I mean, the thing is, they're special situations. So they may, it is possible, especially since they own the debt, it is possible that they think this thing will come through it. And so some portion they'll still maintain as the company continues to come out of whatever situation it's in right now.
That was the third elephant in the room that I wanted to come back around to at some point in this conversation before we wrap it up is, what is your thought on, or have you thought about it, what Antara is going to do with all of these shares of Ape? Like, I know the big fear is they're going to dump them at some point, either like right now, since they can, or right after the reverse split.
It's not an insignificant fear. I mean, like, special situations usually has some situation in mind that they were playing it for. Right now, it's possible they were playing it for just the end of this situation, right? And that is what it is. Like, it's tough because, like, if you're, like I said, my sizing isn't gigantic, so I'm happy to try to hold them through to see what happens by the end of the year as relates to profitability, et cetera. Originally, these guys were lenders to AMC with the belief that they would be able to pay back and then just charging them high yield debt prices, which is from when rates were at 0%, given some of these bonds are at 12% with optionality, with embedded optionality to then, have shares if it didn't go well. It's not the worst special situation I've ever heard of, to be fair. What would then happen thereafter? It depends on how they're seeing the play right now. I don't know. Do I think that there's a possibility they sell some of their shares? Well, at least 8%. We know that 9%. So there's that. But I don't know the answer to it. I would suspect that what commonly happens, and this happens with a lot of stocks, is they'll hold it for a period of time. They have some horizon over which they'll see that things start to work out and then bleed the shares gently into the marketplace. Or alternatively, you'll see them buy puts from time to time just that presume a certain selling price, or sell calls once once the shares are conjoined, they can then do it the more normal way, which is sell calls against their position, so that it is, you see the price that they're trying to get out at.
I was thinking that they were going to slowly bleed them out too. I mean, because they have a big position, they don't want to just crater the price. But then
That's not in their best interest.
There was that filing a few weeks ago. Do you remember they sold like 40 million in one filing? And I was like, holy hell, what is going on here?
I mean, the one thing is that because their cost basis is so low, it's a thing. And I think the other thing that could be potentially difficult for Antara to try to hold the shares, in fairness to everyone else, is the fact that we have this really weird market right now. I mean, with the banks in this kind of state of unease, let's call it, because it really could go either way for the banks right now. Anyone that thinks that we're totally out of the woods is really, they're a very special optimist. Okay. We're unfortunately a little more cynical over in AMC land. So I think you've got earnings season for the banks starting on April 14th. And then we will know once and for all who's going to do what to these poor banks that are trying to figure it out. But as a result, anyone that's of this class, which would be, so it affects, and I have a video on private equity as a result of this. So anyone in private equity, of which distressed debt sometimes is associated with a private equity type function. I won't try to go through it in too much more detail, but distressed debt as well. These two specific players within the hedge fund community would right now like to have a lot of cash, just because if things go truly south within the financial industry, there will be a lot of opportunities that just from a return on investment perspective are lovely. And so that there's not really another way to say it. They're just like everybody else that, like, it's kind of like when the housing market went crazy and you're like, oh, I know these people are going to default. You know what I'm saying? And then you're like, I'm not buying anything for the next year, whatever it is. And you just hoard cash. I already saw that behavior. Like, so the video that I did on private equity, Blackstone didn't actually, even though they raised capital, they deployed some capital, but they kept like 20% of their capital in cash, just on the off chance that this continues to escalate in the first quarter. And so I could clearly see anyone in distressed and special situations also kind of being like, if we can liquidate something, that would be really cool at a profit, and then figure it out. But doesn't mean they would liquidate all of it. So that's always the question as well.
Red Cow Hill says, can someone please explain why APE market cap is 5.26 billion? It is not 5.26 billion. Go read Adam Aaron's tweet on April 2nd, guys. There was data errors out there. The market cap of APE is the price times about 970 million. So roughly, I think that the brokers probably have outdated data now, but roughly,
it's really common. Get numbers wrong a lot.
Yeah.
Like, you have to really double check all of that stuff. I think there was one earnings call I was listening to of a financial company, and they said in the call that they anticipate at any given moment 40% of the data to be wrong, like completely wrong. And all they're doing to check that is they're either checking, like we would, shares outstanding and then price, and then seeing if that even makes any kind of sense. That would be one type of check. And then the other is just using multiple data feeds, and even across multiple data feeds, the number's wrong. So I know it sucks. I've gotten caught up in that as well and just been doing it too quickly.
And it really gets bad when companies are diluting, and we're not getting updates every time they sell shares, either privately or until a filing happens. And I try and explain this to people over and over in different plays, that what you're seeing out there for short interest and market cap are not correct if the company's actively diluting. So it's something to be aware of. I get so much pushback, and I've never been wrong yet. Eventually, when a filing happens, the systems will catch up. It's just, you guys got to be aware of that. It's a heads up.
Yeah.
And stop you know, but you
Don't
can
be mean
only
to us.
data is only so good, but you need to understand how things work in the background.
Yeah, it's literally some guy, guys. Some guy getting a lot, like with a really long list of things that he's got to do.
He was
He's getting,
probably updating the float on the third shift, and he fell asleep and punched a button and hit an extra digit.
yeah, and it
I'm
may
being
not even be a
sarcastic.
guy in the US, okay? It could be some guy overseas trying to translate his emails into whatever language. Like,
What else? So yeah, the combined floats, the combined float of Ape and AMC is, you know, 3.5, $4 billion bucks. Not float, market cap.
yeah.
3.5 according to Webull, but I don't
Yeah,
think
it's
even
just it's just
Webull
that
doesn't have the exact right share count right now. So
yeah, that's why I was really stoked to see your stuff this morning. I was like, "Oh, good, I don't have to do this calculation." I'm so lazy sometimes, guys. I'll admit it. Like,
all right, we'll take one or two more legit questions. Legit meaning you're not just here trolling. There's a lot of troll comments which are purposely being skipped over. Trying not to block anybody, but you know, we're here for people that actually want to get some value, you know, because you want to understand if you are going to stay in this play or not. This is information sharing, guys. We're not here to tell you to buy, sell, or hold. But for those of you that are making your own decisions, sometimes you don't understand all the filings and what's going on. That is what, you know, that is what I hope to do, to help educate you. What do these filings mean, so that you can then make your own choices about what to do with your investments.
yeah, I feel like we got most of the questions. Most of these are you guys teasing me. So funny.
Oh, what is your drink? What is your drink, May?
Oh,
Show
it's
me.
black cherry ginger ale.
Show me.
Oh, no, it's gone now. I just had it.
Was
But
it in a cup or a bottle or a jar? Or what?
glass.
Oh, okay.
I
Yeah, it looks
always
like
put
you're
like my
drinking a
drinks in
daiquiri or
decent
something.
glasses with straws. Look, life is really short. You should enjoy what you're drinking. Black cherry ginger ale. It was two for $4. There's nothing fancy going on here today. So, you know.
All right, May, do you have anything else you want to cover with the folks
I think
today?
that's good. Thanks for doing this with me as per usual. It's always fun to not have to try so hard on these.
I'm gonna do a follow up. I just so you know, maybe we can work on this, but the video I did a couple days ago, how does AMC get to a profitable gap earnings per share? I'm going to do a couple follow-ups to that this week. Number
Cool.
one is, because we all know in finance side, like there's gap earnings per share, but there's also operational profitability, right? You can be profitable operationally even if the gap earnings per share has a negative number, because you got depreciation and amortization in there on the income statement. So
I'm actually kind of cool given how high taxes have gone if they stay gap negative but free cash flow positive. I know that sounds horrible, but use all that depreciation, guys. Enjoy it. All those L's, take them against taxes so the shareholders win. That's all.
So I want to provide a little bit more warm fuzzy to people, you know, that we don't really need to hit 2.75 billion in a quarter in domestic box office to actually be profitable. So that video is coming. And
That's
then
awesome.
another request that people had is, how would the reverse split affect the share count on the income statement and then the calculation of earnings per share? And I think that's another good little sideline quickie video. So those will be coming out.
That's cool. That's awesome. Cool.
All right, guys. Sure, May has a lot of other work to do. I do as well myself. Thank you for tuning in. Thor Bladed says, rocket or bust. All you negative Nancy's need to go do DD unless you're a bunch of shorts. Thank you. Thank you, Thor Bladed. Guys, as always, I'm going to just share what I'm doing right now, which is in this play, nothing right now.
Yeah,
Like,
me too.
there's too many unknowns, uncertainty with the market, the legal thing. A lot of people are asking me, and I'm not ever going to tell you what is smarter to buy right now. I don't give financial advice. I'm not here. I can't tell you to buy one or the other. I can point out when I see arbitrage opportunities, but you have to make your own choices by listening to people who provide due diligence that you trust.
And then you also have to do your own work. Okay.
Yeah. I know a lot of people don't want to do that, but
I know.
I do my best to just help you understand what the filings say, and then ultimately you need to make your own decisions. So, what else was I going to say? We got legal risk. That's uncertainty for these tickers.
Right.
So anything can happen. We don't know what news Adam Aaron might have that might be good news. And then we have market risk with the economy right now. So all of your choices for all of your investments, keep those things in mind and be patient right now for your portfolio in general. I know a lot of people are depressed and sad and beaten down because their portfolio in general is taking a beating. Welcome to a bear market. I've lived through many of them, and I'm sure May, you might have been through one before at least, right?
Yeah. I mean, I have a lot of boring
They're
stuff.
never fun.
They're never fun, but make sure you have something and some boring stuff.
Yeah, buy some boring stuff that's on sale right now, and you'll be happy at some future point.
Maybe wait 2 weeks and just see what these banks have to say.
2 weeks. May said it, guys. Hashtag
No!
2 weeks. That's the word of the day. Everybody, yay!
No, I mean, these banks, I'm like so worried about them, but they could actually really surprise. It could go like so either way. Oh, it's weird. All right, we should probably end it.
Thank you, guys. Thank you, May.
Bye,
We
guys.
will see you on the next one.